Hi, this is the EURJPY chart, and today it's 8th of May 2013 and the time is 16:27 GMT. We are looking at the H4 chart of the pair. The turquoise line you see here is the long entry line according to our signal to our users. It's not late if you enter now, if you wait for some minor downward correction and enter, because the pair has done its plunge, has done its correction, and it's getting ready for a bullish breakout. We see this, you see this ascending triangle here. Once the upper line is broken, we expect a big move. So I'm using Ichimoku system here. The pair has been moving in a range-bound mode for a while, and we see the cloud, the Kumo, being horizontal, which is indicative of no significant trend. But things are gradually changing now. We see that although we had a horizontal belly down bearish but with bullish momentum increasing leading Kumo, the new leading Kumo is definitely bullish, and it has a sharp edge upwards on the H1 chart. We had a bullish Kumo breakout a few hours ago, and we also we see that Tenkan-sen and Kijun-sen had a bullish crossover. It's inside the Kumo, but because of the bullish breakout of the Kumo, we may consider this significant. The green line, the Chikou span, is slightly above the past price action, and it's turned upwards. It's definitely turned upwards. Let's see, we saw the H4 chart, we saw the H1 chart, and now we'll go to the M15 chart, where we see a clearly bullish picture. See how sharp is the leading edge of the leading Kumo, and it got a bit curved here because we had this downward corrective move. You see how sensitive it is? So the sharper it is, the more aggressive prices move upwards. We see Tenkan-sen here containing the price and sloping upwards. Kijun-sen also sloping upwards. Chikou span definitely going upwards and above past price action. 100% bullish picture. The pair just tested the trend line and reversed. You see this? We will see if it will manage to break it. So let's go to the daily chart. Shows that the leading Kumo is definitely bullish, and slightly the edge slightly turned upwards and pointing upwards slightly. If it becomes sharp, it depends on whether these days candlestick will go above the trend line or this will happen tomorrow. We will see. So depending on your account's tolerance, if you enter now or if you had entered when we gave the signal, you should place your stop at the safest place to be. So if that place, if it's ideal to put it somewhere below the trend line, this lower trend line. So if this distance between your entry and your stop is more than 3% of your account's equity, go to a smaller chart, go to the H4 chart, and see if you can tolerate putting your stop below the upper border of the bearish Kumo here, the Senkou span B, a few pips inside the Kumo, or even better, below the lower border, but we said that you can't, suppose you can't go below the trend line. Okay, so put it inside the Kumo, on the H4 chart. On the H1 chart, maybe a safe place would be, you see the blue line, the Kijun-sen, a few pips below the Kijun-sen, or even better, a few pips below these two candlesticks, their tails. Again, it depends on your account. Count these pips, this distance, and decide if they represent more than 3% of your account. Go and look for a safe stop at a smaller time frame. Of course, if you come here and you place your stop, let's say below these candlesticks, you are exposed to the risk of a corrective move which will reach this point, will test your stop level and reverse upwards again. So the closer you put your stop to your entry point, the higher the risk to have your stop hit. As the trade progresses, you will trail your stop, but for the beginning, for now, try to pick a place where it's highly impossible for the price to test it, to go and hit it. So thanks for watching, and happy pips.